It's something totally different, and you're really going to enjoy the presentation. So if you would, just hold your questions till the end, and then Mark will get to you at the end, and then after he answers your Q&A, then I'll come on and I'll show you how I actually use it in my trading to make it a little bit simpler. If you just want to make it like, all right, use this time frame and use this time frame, and I'll show you how I pick out trades with this innovative indicator. So Mark, it is all yours.
Thank you, Hubert, and great to be here with everybody tonight on Sunday night. This is a lot of fun to talk about. Obviously, value charts is a topic near and dear to my heart. So let's go ahead and dive right in respecting everybody's time here on Sunday night. So again, welcome to the webinar, The Art of Strategic Trade Entry Using Value Charts and Momentum. Now, just to verify, if everybody would, I want to make sure that the slides are advancing on everybody's screen. Can everybody see, just type in an H if you can see Hubert's bio slide here. Okay, thank you very much. Okay, well, everybody knows Hubert for the most part. Hubert is a close friend of mine as well, and a featured speaker at international events in our industry, and Hubert has been a professional trader for many years and also a close friend as well. He has appeared on a number of the leading trading-related news networks, and his experts have as well, and he's also, when he decides to go a featured speaker at a lot of the Traders Expo events and whatnot. So if you're here tonight, I'm pretty sure you're probably already familiar with Hubert. My background is basically in the hedge fund space. I've been working there for about 20 years. I'm very passionate, as Hubert is, about trading, and as most of you are. After my first year of engineering college, I left after my freshman year to determine whether I wanted to trade or not, and I went up to the Chicago Board of Trades, walked right in the exchange at the age of 19, and got a job on the floor at really the lowest position you can start at on the floor, and that is a runner. And I was thrilled to death with that prospect. But as with any floor, you're either a prince or a pauper, and I was a pauper at that time, so I had to work another full-time job outside of that. Worked for several years there, and then when I turned 21, leased a seat for a few months and realized that my true passion was with working with the computerized algorithms and quantitative financial models. And so I went back and finished my degree in engineering, worked for a regional hedge fund, and never looked back. Really gravitated towards the hedge fund universe, and now working with Microquant, which is a financial technology firm. So too much about me. Let's go ahead and dive right in. Before I get started, I always like to talk about the risks associated with trading. So please understand that trading is risky. Trading or investing carries a high level of risk. It is not suitable for everybody. Make sure you understand that money you trade in the markets is subject to loss. If you cannot afford to lose the money, then I would highly recommend that you not trade. Okay, I'm just being straight with you there. Now, the other thing I was going to mention here, if you ever see simulated results, CFTC Rule 4.41 talks about hypothetical or simulated performance results having certain limitations. That's exactly right. Even under the best scenarios, the simulated or hypothetical results have limitations, and it's really difficult to know exactly what those are. So if you see results out there that are too good to be true, oftentimes they are. Even in the best scenarios, it is difficult to know exactly what you can expect in the future, but they do have simulated results, and hypothetical results do have value. They do have validity, but just understand that past performance is not necessarily indicative of future results. Now, when I was in engineering school back in the early 90s, one question that I had was that value references, as we know them outside of the markets, are extremely important. For example, when I went to buy a used car as a college student, I was always looking at the Kelley Blue Book to try to determine whether the price that was being asked for the car was reasonable or fair. And I had a value reference later on when I purchased my first house. I had an appraiser come in, and he would look at comparable properties and determine whether it was fair or not. So what we're talking about is objective value references. And what I found interesting is when I came into the markets, when I came into the markets, I realized and noticed that there was not any type of blue book or not any type of appraisal process. Now, that's common sense, but what I found interesting is there really was no objective value reference. Now, we have overbought and oversold indicators like Bollinger Bands, RSI, stochastic oscillator, but they're really different in terms of really understanding what value is. They are designed to point out what we'll call overbought or oversold conditions, but there was nothing out there to really talk about fair value and do a good job of describing the objective valuation for any market and time frame combination. And so that's what set me out on the search to try to create what I call a standardized definition of market valuation, and that's what ValueCharts is. So I started that as an engineering student way back in the early 1990s, and that's how ValueCharts were born. Now again here, when we talk about outside of the markets, think about the importance of hiring an appraiser when you purchase real estate properties. This is so important. It's such an ingrained part of the process anytime you purchase real estate that banks rely heavily on this to make sure they're not lending money for a property that does not serve as collateral for the loan. So they're really interested in understanding what we'll call the objective valuation for the property. Now, same thing with used cars. When it comes to purchasing a used car, none of us really know what a year, make, and model car is worth unless we're an expert in the used car industry, and most of us are not. And so that's why the Kelley Blue Book and the Edmunds Guide are so important to have as references. Now, when we come to the stock market, what's interesting is over the years there has not been any kind of value reference. Now, we understand that the stock market is a different kind of market. It's a centralized market, whereas real estate and used cars are non-centralized markets. And the biggest mistake that traders make, and new traders especially, is they assume that because everybody's paying the same bid or selling at the same offer when looking at an exchange-traded or an OTC product, that represents fair value. And that's not the case. Exchange-traded markets are on a continual search for fair value. But getting back to my point here is that there has not historically been a blue book or any type of objective value reference, if you will, for the markets. And that's really where the ValueCharts concept was born. Now, let's talk about strategic trade entry. We don't care about objective valuation for the sake of objective valuation. We care about it because it can be extremely powerful in identifying strategic trade or places to enter the markets. Without it, it becomes extremely difficult. Now, there are other tools out there that can be used, but there's nothing out there that does exactly what ValueCharts do, and that's why I never trade without them. I always have ValueCharts up on my screen. Now, I'll show you why later on in this presentation, but first of all, when we talk about value in the markets, historically, what's interesting is outside of the markets, we talk about value. We have, the appraiser come in for real estate. We have the Kelley Blue Book for used cars. But when you come historically into the markets, the term value has referred to subjective market valuation, which means that it's really the opinion of some sort of analyst out there. And historically, what's interesting is talking to a publisher at one of the major financial book companies, they basically said that value books have sold very poorly over the years, and that's why, and the reason why is because, in my opinion at least, it's been a subjective valuation, which means that that's really nothing more than the opinion of somebody who 9 times out of 10 doesn't even trade the markets. This is not what we're talking about with ValueCharts. We have no interest in subjective valuation. What we're talking about is something much closer to the Kelley Blue Book, much closer to the appraiser in real estate that analyzes what we call objective market valuation, and that is the historical transactional price activity for or from actual market participants. So getting back to what we're talking about here, strategic trade entry, this is what we're really after here, and that's entering each trade with the goal of achieving unrealized profits as quickly as possible after trade inception. That's exactly what we're after. If we buy undervalued, it makes intellectual sense that if we buy an asset undervalued, that it should at least pop back up to fair value, and that we should be in the money, if you will, or profitable. And that's really what we're after here in trading. Now, learning strategic trade entry is perhaps the most powerful skill in trading. There's been an age-old debate in trading. What's more important, the entry or the exit? Now, in my opinion, it's the entry. No doubt about it, all right? And I'll tell you why. Because if you enter a market strategically, and if you get yourself in a position where you have unrealized profits, then you have a lot of very attractive possibilities in front of you. If you get into a market in a very undesirable price, at a very undesirable price, or on the wrong side of value, I like to say, and you have unrealized losses, then you're really in the hole right out of the gate. So it's almost like, if you think about it, most deals out there that if you structure a deal legally, the most important work you ever do in a deal is on the front end with all the terms and conditions. Critical. Same thing goes with the trade. So the goal here is to try to enter strategically, even if you're wrong about the longer term trend, if that's what you're after, at least you're entered strategically enough to where you can get out of the market, oftentimes with a small profit or at break even. Now, a quick example of that is when we lived in the Cayman Islands briefly, I saw a condo come up for sale. A lady had passed away, unfortunately, and my realtor told me about it. He said, Mark, this condo is way undervalued. It's way below the market, and it's not going to last. Literally, I had agreed to purchase the condo before the real estate office even opened. So I said, let's just buy it. Let's just get it. We'll pay asking price for it. And I looked at it, and it was about $50,000 below, if not more, even $100,000 below a lot of the other condominiums there that were comparable. And so I knew, even if I didn't keep the condo longer term, that I could turn around and sell it for fair value and make a profit. And I was right about that. So I only held on there for about 6 months, and I turned around and sold it for a profit, bounced right back up to fair value. I think I had it on the market for maybe a week and was able to sell it fairly quickly for a profit. So that's the power of buying an asset undervalued or selling an asset overvalued. And so this is a very important skill as a trader. Once you are in the money with the trade, as I said before, then you are in the driver's seat. Okay, and I'll talk a little bit more about this, and this is what Hubert's going to talk about as well. So you want to really focus on being strategic with your entries, and you open up a lot of very attractive possibilities right out of the gate. Now, in order to do this, you have to have the right tools. Now, think about the idea when you buy a used car. If you buy a used car, your tools include the Kelley Blue Book. If you don't have that value reference, then you are really lost. I would be lost. So we need to make sure we have the right tools in order to accomplish this. What are these tools? The three components of technical analysis, from my experience, are as follows. These three aspects of technical analysis describe any market. The first one is what I'll call cost. This is a traditional price chart, a candlestick chart, open, high, low, close chart, a line chart. That plots graphically the cost of a stock, a forex contract, a futures contract, an options contract. So we're interested in that. The traditional price chart represents probably the most widely used market analysis tool in the world. Now, beyond that, we're familiar with momentum, which represents the velocity of price. Now, momentum indicators have been around for a long time. We're familiar with them, and they tend to be fairly similar. But momentum is a very important aspect of any market and time frame combination as well. Last but not least is value, and in my mind, value could quite possibly be the most important one. All right, so again, outside of the markets, rarely would anybody make a major purchase without really understanding value. Is it the price overvalued, undervalued, or at fair value? So these three right here, in my mind, or in my opinion, form the three components of technical analysis. If you do not have all three of these on your trading screen, then you do not have the complete picture, in my opinion. Now again, traditional price charts display price in terms of cost. It displays the price of the stock compared to absolute zero. IBM trading at $100 a share, for example, or a futures market grains, soybeans could be traded at $13.25 a bushel, or crude oil trading at, what call it $100 a barrel. It's plotted with respect to zero. Momentum indicators display momentum. Nothing new there. We don't need to spend a lot of time on that. Now, value charts is a tool designed to display objective market valuation, and value is a relative measure. All right, it's important to understand that value is not absolute. It's a relative measure. So we're interested in understanding what active market participants consider to be fair value, overvalued, and undervalued for a market. And there is a way to measure value. It's important to understand that. Introducing value charts. Let's talk about what value charts are. Value charts are designed to communicate the objective valuation for any market and time frame combination. Now, I emphasize several things here. Okay, first of all, I emphasize objective. This is not the opinion of an analyst. Value charts analyze historical transactional price activity for the market that you're evaluating, nothing outside of that market. It's an algorithm designed to analyze what buyers have paid and sellers have sold for in that market. And when you talk about value, that is absolutely by far the most powerful value information for any market in the world. What have buyers paid and what have sellers sold for? Second thing here, for any market and time frame combination, it's possible for a market to be overvalued on one time frame and undervalued on another. Let me give you a quick example. If you look at real estate, we had a huge bubble, as everyone knows, in around the 2005 time frame. Now, that was overvalued in all time frames. Okay, but what happened was after 2005, you saw a fairly substantial correction in many parts of the country, and it became shorter term undervalued, or at least back down to fair value. Now, if you look at the short term, a lot of shorter term property flippers will say, okay, prices have come down. We're now getting to the undervalued shorter term valuation zones, if you will. The longer term, 50-year plus real estate investors may say, well, wait a second, we're still way overvalued when you look at this thing from a 50-year cycle standpoint. So value is time dependent. There's nothing wrong with that. It makes it a little bit more challenging to totally understand, but it makes it very powerful as a tool to analyze and trade markets. Let's talk about value keys, or things you need to understand about value. First of all, as I just said, value is time dependent. Second, value is best described as by active market participants. Now, historically, as I said before, in the markets, we have seen analysts out there who make wild predictions, and a lot of times they have a conflict of interest. Their firm is getting consulting fees from a certain company, and they're trying to push their stock. They're almost like salesmen. They're not really even analysts. So subjective market valuation, in my mind, is only as good as the analyst giving it, or the skill of the analyst giving the advice on that. And in my mind, it is typically not something that I track because it's wildly inaccurate. We are not talking about that. We are talking about something that's objective, defined by active market participants in the form of historical transactional price activity. Third, value is best described as a price continuum. What do I mean by that? Well, if you think about the fair value definition historically for most industries, it's a single price. But I believe that fair value is better described by a price range. It's where do the majority of buyers and sellers, where have they transacted business for this particular asset? And it tends to be not a single price, but a price range that sellers and buyers are comfortable paying or selling for instead of a single price point. And that goes for the overvalued and undervalued levels as well. So it's not a single price. It's price zones, if you will, that we can quantify as fair value, moderately overvalued, significantly overvalued, etc. And I'm going to tell you more about that here in a minute. Okay, the next one is fair value along those lines is better described as a price range, not a single price level. Value is defined as time at price. What does that mean? Well, going back to the Florida real estate market, I remember when the waterfront properties really started to shoot up in around the 2000 to 2005 timeframe. And a lot of people would think, wow, that's really expensive, that's way overvalued. But after the prices stayed at that overvalued price level for a period of time, they became more widely accepted as fair value. So in the same way in the markets, if you have a market shoot up, it's overvalued short term, well, as it stays at that particular level long enough, then it becomes more widely accepted. So value, fair value especially, is time at price. Now, value also can be measured. This is probably the most important thing I'll say tonight. Value it certainly has to do with the psychology of a market, how they look at an asset. It can be measured, and that's very good news for all of us because we want to measure it. We want to understand for every market and time frame what the buyers and sellers are thinking. Now, this is actually a picture, if you will, or graph showing traditional price charts on the top and showing value charts price window at the bottom. Now, the important thing to understand here is the stock on the top, UTX, is being plotted here with respect to zero. So this is $55 a share over zero, $45 a share with respect to zero. Now, the value chart at the bottom here, if you can picture in your mind kind of a floating axis that follows price along, this would be a very primitive definition of value right here, and this floating axis right here is what would serve as the zero line down here for our linear representation of value. So I'm drawing that straight line, not doing a very good job of it here, but imagine this totally straight line along the bottom here is the same thing as a line that would be following price along. And this gives us the ability to analyze deviations above or below that line as being overvalued or undervalued for any particular market and time frame combination. Now, I'm going to show you this in a minute, more about this, but notice that there's 5 different zones here represented by 3 different colors. The middle green zone here is what we'll call fair value. Then we have this upper yellow, upper red, lower yellow, lower red. Let me show you what those represent. Now, value charts is a very scientific indicator. A lot of study has gone into this. My background is in engineering, and I have a minor in mathematics with a focus on statistics. So I was very interested in creating an indicator and have worked with several very bright PhDs since then to refine this. But value charts essentially right here in the middle, this green zone is fair value, and you'll notice that that corresponds to plus or minus 1 standard deviation in statistics, which represents about 68%, if you will, of transactional price activity historically for any market and time frame combination. So that's where most of the trading takes place in what we'll call fair value. Now, moderately overvalued is typically and above, so this includes the upper yellow and upper red together represent the top 16% approximately of historical transactional price activity. The bottom yellow and the bottom red combined represent the bottom 16% of historical transactional price activity. So the yellow zone here is +1 to +2 standard deviations. You'll notice that lines up with our bell curve over here. And over here to the left, north of, including significantly overvalued, that's +2 and above, +2 standard deviations and above price activity. The same thing goes on the downside here. So this is scientific. You don't have to know anything about this. So you don't have to care about standard deviations or statistics or anything else like that. All you have to know is that there's a lot of science that has gone into the value charts indicator, and that there's 3 colors, 5 valuation zones, and the more, or the higher valuation, if you will, moderately overvalued to significantly overvalued, means that the market is doing one of 2 things. It's really gotten way ahead of itself and it's due for a correction, or you're seeing what we'll call a value migration. So just understand this is how value charts are organized, and it's fairly intuitive what they mean. Significantly undervalued would suggest that we could be in for either a pause in the market or we could be in for a reversal in the market. Or if in extreme cases the market continues to head south, having extreme value migration. Now, this brings up another point here. When you talk about the units, I'm going to touch on this here in a second, and we're going to get to the good stuff here in a second, but this is just giving you some theory behind the value charts. Value charts use a specialized unit called dynamic volatility units. These are designed to expand with increasing market volatility and contract with decreasing market volatility. Okay, so that's really important to understand that. They're not the same units as any market. For example, if I applied a value charts price window to a stock, it's not in dollars per share. It's in dynamic volatility units. If I applied a value charts price window to gold, it's not in dollars per ounce. Okay, it's in dynamic volatility units. And the great thing about that is because they're defined in dynamic volatility units, they are effective in continuing to define overvalued and undervalued levels through dramatically changing market conditions. One, that's the first powerful point. And the second is now we have a standardized definition of market valuation across all markets. So just because the units of a market changes, like for Forex versus grains versus energies and metals and stocks, they all have different units, and bonds, it doesn't matter because value charts has a universal unit, and you can use them, and it means the same thing for all the markets. Now, a lot of you may say, well, does this work for stocks? This works for any exchange-traded market or OTC market in the world. As long as it has decent liquidity and decent volume, value charts tends to be very, very effective. Now, we're not going to cover this today, but there's also a complementing tool called Price Action Profile, and this is designed to communicate to us the degree that a market is overvalued or undervalued. So in this particular case, we can see right here, this market is trading at the upper end of fair value. It historically trades above this 27.7% of the time and below this 72% of the time. Very powerful information. Now, why does this matter to you as a trader or to me as a trader? Well, if a market is significantly overvalued, for example, and it only trades less than 1.6% of the time at or above that level, you may want to hold off on buying at that level because the odds are dramatically against you being profitable in the near future. Does that make sense? You don't want to buy at the very top of what recent market activity between buyers and sellers would suggest to be extremely overvalued. Same thing undervalued. In fact, you may even want to be a seller at those levels if you have other compelling reasons to sell. The other thing is for undervalued conditions, you don't want to be a seller if it's significantly undervalued typically. Now, if you have a stop loss in the market and that's your uncle point, you want to respect that. Get out, even if it's significantly overvalued or undervalued. But typically, that's very powerful information that I use along with other indicators to help me understand when to get in and out of market. And I'm going to show you more here about that in a second. This is an interesting chart that I created to show you how dynamic volatility units adapt to changing market volatility in the S&P 500. So notice how we have more lower volatility regions right here, and you have a contraction of your dynamic volatility units defined in standard points here. So these, I've actually created another formula to say display the dynamic volatility unit in terms of the same S&P index points as the top chart. And you can see visually how these units expand dramatically right here with increased volatility and then contract a lot more. Like right here, they really contract over here when volatility really decreases. So they have to do that if they're going to be effective in defining overvalued and undervalued conditions. Now, not to get too complicated here, just remember, there's a number of different valuation zones. There's only 5, and they have different colors. Very easy to understand intellectually, but this is something that you need to know about. The dynamic volatility units adapt to changing market volatility. They have to in order for us to effectively define overvalued and undervalued. This is a great example of copper. Bull market really started to take off. Volatility went through the roof, and you can see that the dynamic volatility units really started to adapt, really started to expand with increasing volatility, and that allowed them to be effective with dramatically changing market volatility. Now, this is just another way for you to see how ValueCharts tools can be displayed. We're primarily focusing on this presentation with this tool in the lower left-hand corner. We call the ValueCharts price window. Okay, but there is a price action profile as well, which is extremely powerful complement. You don't have to have it, by the way, to trade, but this gives us a lot of powerful information as well. And then we have our status bar down here, just saying that the market is currently trading in fair value. This is just one way to look at the tools, but really the most important one is this one called ValueCharts price window, and that's displayed typically right underneath a price chart. Now, one question that would be logical for any of you to ask is, okay, Mark, this looks great, but how in the world do we know this even works? You're saying you have an algorithm to define a model, if you will, to try to model the valuation for any market and time frame combination. Excellent question. We actually went out to several top PhDs at top universities, including University of Michigan, UCLA, and University of Pennsylvania Wharton, took this concept out there and say, okay, here's the concept. Does this work? Does this ValueCharts concept effectively model market valuation through dramatically changing volatility conditions? One of the great examples out there was the S&P 500 over 30 years, starting in 1980, because volatility increased 450% between 1980 and 2010. So this is a great example, a great test ground, if you will. And Dr. Eric Laber from the University of Michigan came back and said, ValueCharts demonstrate a remarkable ability to define market valuation through dramatically different volatility conditions contained in 30 years of S&P 500 market data. So it did work. And he's using a statistical study called box plots. Again, you don't have to know anything about this. This is just a validation using more advanced statistical studies. The second half of this was using a study called a QQ plot analysis using the 3 different decades. And what he's looking for here is a 45-degree angle relationship between the decades. And we saw that. So this is a second way to really validate the ValueCharts through the price action profile indicator. And again, it says the QQ plot clearly shows the price action profile from the 3 different decades in the S&P 500 to be remarkably similar, which indicates that ValueCharts were highly effective in defining market valuation despite dramatically changing volatility conditions. And we've worked with many other markets besides that. So ValueCharts according to our research, according to 3 top PhDs, is highly effective in defining market valuation. Now, before we continue, let me tell you something. Just because a market is undervalued does not mean you want to buy it. Just because a market is overvalued does not mean you want to sell it. Okay? It's not that simple in trading. However, when you combine value charts with price charts, when you combine it with other indicators, including momentum, it can be extremely powerful. All right? So it's not something you don't want to look at value charts as, oh, it's undervalued, time to buy. That's not how they work. Now, you may be right and may be undervalued and may bounce back, but in general, as traders who want to enter markets strategically, we want more information. We want more confluence than that. So let me show you some trade examples. Okay? Now, recently, I caught the very top of the stock market. All right. Now, when I say I caught it, I broadcasted this to all the members at ValueCharts.com. Not only that, all right, I caught the very top of the stock market down to the hour. All right, and I broadcasted that. And then the secondary correction we had, I caught that down to the hour. Okay, so 2 major tops. Now, whether they're the long-term tops or near-term tops remain to be seen, but these were at least near-term tops, and I was able to catch them down to the hour, not because I'm smart. It's because I had powerful information communicated to me by value charts, by momentum, and by my price chart. Let me show you exactly what I'm talking about here. All right, so again, this is zooming up. This is the top down to the hour on the 7th of March, and then the 21st of March again with the correction. These are the 2 I got down to the hour, and I broadcasted these. So there's a record of this. This is the record. First one right here, I broadcasted out to our users saying, stocks look like a potential short-term or long-term top right here. And they reversed right there. I had several different things that were telling me that they were toppy. One of them was they were trading in significantly overvalued and bounced out of them because of a news announcement. And we had a channel. It bounced up and failed to rally through once it broke through the top. And then weekly charts were looking fairly bearish as well. So that's the first one. The second one is, let me show you a chart example on that here as well. Let me drill down and show you the example here. So can everybody see my TradeStation S&P chart right here? Actually, no, let me show you my NASDAQ chart. That's the first one I want to look at. Okay, can you put N for NASDAQ? If you can see this, just to make sure everybody can see this chart. Okay, thank you. All right, I've got a few ends there. All right, now here's what I'm looking at right now. Do you see where that arrow is right there? There's 2 arrows. I've got a value charts price window down here at the bottom, and then I have my momentum, and then I have my arrow at the very top. That's when I broadcasted that message to go out for the trade alert saying this could be a long-term top in the stock market. Now, really what I was looking at is, you notice right here, momentum, first of all, my indicator line is falling. So my first point right here, point number 1, is higher, and then point number 2, even with new highs, is weakening momentum. And this is what we call a bearish divergence. I have higher prices and weakening momentum. And then I had the channel break as well. So if I put, there's a little bit of a channel you can draw on the S&P. It's not as evident on the NASDAQ. I actually chose to trade the NASDAQ on this, but this, according to my trade alert, you'll see by the chart, at least I showed you my trade alert on the PowerPoint, had broken through the top of the channel and not sustained that. So that's not all indices trade the same. The S&P broke above and failed to go much further. The NASDAQ was weaker. I like the fact that it was weaker, and so I was actually selling that in my own account. And you'll notice down here on the value charts price window, this one bar with the red arrow above it has a red tip. That means it traded in significantly overvalued and then quickly reversed. So you'll notice that prices went down right away, and then they consolidated for a few days, and they finally started to sell off even more. So that was a nice situation where very, very low risk. I literally caught the high within a few points, and it sold off more than 100 points in the days following. So that's a nice situation. Let's go back over to the presentation. I'll show you the second example. Now, the second chart example here, broadcasted on the 21st, was what I'll call a combination of value charts and candlesticks. This is a yellow hat doji. It's a new hybrid of candlesticks that's extremely powerful. A lot of you may have the Smart Setups candlestick mega bundle with the value candlesticks. very powerful, especially when, again, you combine that with the other types of analysis. So you'll notice on here, down here at the bottom, you'll see my momentum histogram is weakening from point number 1 to point number 2 to point number 3. So 1 here, 2 here, and 3 here. Yet I have higher prices. So a double bearish divergence, and that was 1. And then this nice yellow hat doji right here was the second thing. So that was a great example of, again, a yellow hat doji on futures, sell setup. And then if we go over to our actual charts, let me show you that on TradeStation here. We had a few traders take advantage of this, which is a nice situation. Hopefully everybody can see the S&P 500 chart in TradeStation, but you'll see the red arrow right here, the red arrow down here on the value charts price window. These are the things we look for. These are the confluence of momentum, the confluence of a kind of a bearish longer-term outlook on the stocks led us to take this yellow hat doji in the 60-minute much more seriously, and as it turned out, the market sold off fairly aggressively. Now, do I always get these right? Am I always right with my value charts predictions? Absolutely not. I'm not. But it's a game of probabilities. So having the information about objective market valuation as communicated with the lower value charts price window here, along with momentum, along with price patterns, support, and resistance is extremely powerful. Okay, so the combination of those together, and then I would challenge you as traders, if you're great with candlesticks, combine value charts with candlesticks. If you enjoy Fibonacci levels or enjoy Gann, Elliott wave types of patterns, or just a lot of different types of chart analysis, value charts are an extremely powerful complement to all of it. So I don't suggest you abandon what's working for you. I suggest you complement it. All right, add another very powerful tool. And here's the other thing. If you do not have the objective value picture for a market, then you do not know, you're really blind to what I consider to be maybe the most important aspect of that market. Okay, so let me just see if, for Renko bars, I would say the Renko bars Dan, they're not volatility-based bars, so the value charts are designed to read volatility from the different bars itself in the formula. So it's not nearly as effective. You can play with it yourself, but I typically like to use value charts with either time-based bars or tick bars as well. Okay, Mark, I'm new to value charts and notice a divergence between price and the indicator and Netflix. Yeah, in fact, this is a good question, Yvonne. Let me have Hubert jump in here and talk about some actual examples. He may be a better one to actually answer that, as Hubert's an avid stock trader as well. Would you show, some stock requests here. So let me have Hubert jump in. This is a great segue. Hubert's a professional trader, has been for many years. He's now, in fact, it's funny, Hubert and I actually met each other through value charts. So before he ever met me, he had actually started using value charts to trade with, and then obviously we had a mutual interest there. But Hubert's come up with some great ways to trade value charts that work for him. So let me bring him on here and then have him show you some actual examples of how he uses this in his trading. So Hubert, are you available to jump in and show your screen?
Thank you, Mark. All right, so what I'm going to do is before I start showing you live charts, what I'm going to do is I'm going to first make you a special offer tonight, right? Surprise, surprise. So normally, Mark owns a company called ValueCharts, and they normally have value charts tied up into a bundle. Okay, so I'm going to share my screen. So as soon as you can see my screen, please let me know. I'm going to share screen number 6. Okay, screen number 6. So you should be able to see where it says Value Charts Core Bundle $9.97, Value Charts Ultimate Bundle $14.97, and then Value Charts Plus Bundle $5.97. Does everybody see that? Don't freak out on me though, because I have worked you a wonderful deal. What we're going to do in order to get everyone acquainted to, and this heads up, this is a test. This is a marketing test. It's like you test the waters of a market and you test a trade. Well, we're doing a price test, and we're trying to see if we can get more people involved in using value charts so that they can learn how to buy low and sell high. So for the first 50 people that want to take us up on this offer, we are going to allow you to buy value charts, but just value charts only, okay? Grab a link here, value charts only, for $97, okay? So I'm going to hyperlink you a link in here really quickly, and I'm going to copy it, and I'm going to send it to everybody in the entire audience. So if you go to this URL, if you go to valuecharts.com/chart, you will get the value charts out of this $997 package. Now, you don't get all of the indicators. You only get value chart, okay? So what I've done is I've talked Mark into letting you have the value chart indicator, which is this one on the bottom of my screen right here. Can everybody see it on TradeStation? And what is value chart only? Value charts only is the one on the bottom here, so you can see where it's got extremely overbought, moderately overbought, and extremely overbought. So I want to show you real quick like how I do it. I have the ultimate, what is the same program shown last week? If I bought last week, but I haven't, yeah, Eddie, just give the team and give the office team a chance to get back to you. They'll get in first thing Monday morning, and they'll take really good care of you. This is the same one. Does this work on AT charts? Yes, it does work on Infinity AT charts. What about TOS? It works on TOS, TradeStation, eSignal, Sierra, Ninja, Ameritrade. It works on all the big boys, okay? Multi-charts. So, yeah, it works on a lot of different platforms, not just TradeStation. It'll work on TradeStation, eSignal, TOS, Ameritrade, Thinkorswim, what else? Ninja Trader. Doesn't work on Scottrade, unfortunately. Does not work on FXCM, sorry. How well does it work with Ichimoku? Works really good with Ichimoku. So I'm going to walk through and show you some examples. Does it stock charts? It doesn't work with stock charts. It works with all major charting platforms, though. But some of them we just don't have enough bandwidth to build for all of them. Can you show the value chart scanner? Not tonight because I don't have enough time. I'm going to show you. I'm going to focus mainly on the value chart. So here's how I use this thing. So at any time during the presentation, I'm not going to be using slides. I'm going to be using live charts. Does everybody see the link here? valuechart.com/chart. Do you all see that? And then you see area code 859-963-3445. All right, you can call my office. Although there's nobody here at the office, I think they've got their phones at home with them, and they'll answer the phone at the house, okay? So I'm going to turn that phone off so it doesn't drive me crazy. Shows overvalue, and the price goes up on 327. All right, so let's go through this. So the first thing you want to do is you first have to figure out what type of trend you are in. Now, if we're looking at DBA, and I'm trying to talk a lot of people into getting long DBA, can we all agree that DBA is in a pretty good little uptrend? Does everybody agree with that? DBA, this is a daily chart. DBA looks like it's going up. This is an agriculture ETF. So we're going to pretend it's in a valid uptrend because it is. Now, what I do is I go, okay, it's a daily uptrend. So what I want to do if it's in a daily uptrend, then I only want to buy when it's extremely, severely oversold. That's when I want to come in there and pick it up when it's below market value. Does that make sense in your mind? Wrap your head around it. Does that make sense? There's two different places we're going to buy it. Either moderately oversold or extremely significantly oversold. So for me, I stay away from the moderate for the most part. Unless it's in just some massive trend and it'll never pull back for me, then I'm forced to get in there. So do you see anything? So this is a 10-minute chart. So you would not pay attention. So you can see here. So this is a good place to buy DBA. Look here. You would have bought here. Oh, my God, you would have lost money. Oh, that's terrible. You would have bought here. You'd have lost money again. Well, you wouldn't have bought there, though, but you would. Look, you would buy here, and you would buy here. Now, you can see that gives you some pretty good entries on pullbacks now, right? Because I even showed you the worst case scenario. Oh my goodness, this thing was topping and it rolled down below the yellow. Even on the sell days, it gave you opportunities to buy in value. Now it depends on your stop loss, right? This thing doesn't move like crazy, but it still gave you some really good opportunities for buying sell signals. Now, if you went on the one Friday, then you would have bought down here on a 10-minute and you'd have sold up here. Now, I would not have sold because I think DBA is going to go substantially higher, but you can take a profit. You would have bought on the gap down, and you would have sold when it bounced back up. So let's take a look at the ES, at ES. I'm just going to go walking through some different markets. 10-minute chart, I use a daily and a 10-minute. So on the ES, I would say the ES is still in a decent uptrend, right? It's definitely shortable because it acts like it's running out of gas. It's in the daily uptrend. It's above the yellow, above the purple, above the cloud. I want to buy when it sells off. So what you would do is here is an area where you would have bought on Friday right here. You would have bought right here. I'm going to highlight for you two different areas that were extremely oversold. Right here. Can you see it right here? So I'm going to blow this up so you can see it. There you go. Now, do you see this little red tip right here? You may or may not be able to see it because I don't have mine real thick. but I can see them. I'm just trading my eyes. So there's a buy right here, and then here was a sell if you want to sell. Here's another buy signal right here in the ES, right? There's 3 of them. I'm putting on the center one, 1, 2, 3. So you'd have bought in this area, and now it's gapping up, and you could take some profits. Makes sense, right? How do gaps affect the calculation of value charts? Well, it's obviously going to mess with it, right? Because now it's gapping up, and it's saying it's a value area sell, extremely overbought, and you'd want to flip that out. So I wouldn't pay so much attention to the ones that they're gapping up and telling you to sell because you're in a massive uptrend. So let's take a look at YM. If I hit enter. All right, so on an @YM, on a daily chart, you can see we're still in a pretty good uptrend. So the same thing as the ES, I would have wanted bought down here and then sold on this gap up. Let's see if there are any other buy areas on a 10-minute time frame. Aha, there was. There was a buy here and a buy there. Not bad. Let's see if there's anything else. Here's a nasty little sell-off. You would have bought there. That one would have cost you some money, right? If we are swing trading, do we use the daily value charts? Yes, you can. You can use the daily value charts. What I like to use is I like to use a trend confirmation first, and then after I've got a daily trend confirmation, I don't really care what you use. Trend lines, Ichimoku, Hakanashi, I don't really care what you use to confirm your trend. Just confirm that, and then figure out what lower time frame you're going to use for an intraday entry so that you can hold on to it a little bit longer. Do you personally use value charts in confluence with Fibonacci's and stops and exits? If so, how? I do use Fibonacci's. I do use value charts a lot. I'm teaching you the exact same way that I would use it right now. Now, if I'm on a Fibonacci zone like an ambush, and I also get a value chart buy or sell signal, that adds a little bit more weight to it. So let's take a look at a couple of other charts. Let's go to Tesla, TSLA. Okay. So Tesla is in a major uptrend. It's in a minor downtrend. And let's say that we're bullish Tesla, and we're saying, okay, we're one of the Tesla devotees. We're in the cult of Tesla. We think it's going to go to 400. And it may or may not. But what we're going to look for is we're going to look when it's extremely overvalued on a 10-minute chart to kind of step in there. Now, if you say, man, 10 minutes is kind of a little tight time frame for Tesla. What if we use a 60? Okay, let's do that. Well, you can say, all right, on Tesla, there are a couple of initial entries you could have got yourself. You could have got long Tesla here, or you could have got long Tesla here. And you're going to say, well, it continues to go down. It's still got a little bit of room to go down, but notice that it didn't give you a lot of entries since it's sold off all the way from here to here. It only gave you 1, 2, 3, right? So not too bad, not too shabby on a 60-minute time frame. It's not. It's kind of a very sexy, complicated, elegant way to buy a falling knife. Anybody ever tried to buy a falling knife and you just buy it and it slips through your hand and cuts you, stops you out, and you want to buy it a little bit lower? So yeah. I apologize. I just logged in. 2 questions. Is this recording? Yeah, it is recorded, and the playback will be available Monday for 48 hours. Looking at the bullish divergence on the Tesla, lower price value shows higher low. Please comment. I don't use it that way, Yvonne. What I do is I just look at it as number 1 in my daily uptrend or downtrend, and then this gives me my entry areas. It works really good in currencies. Works really good in stocks. Let's take a look at a couple of GOOG. Let's take a look at Google here. I'm just doing some high flyers. Google's in a massive uptrend. It would be in a very aggressive short. It's 1 bar below the cloud, so you may get a bounce here, and you can see you've got some decent entries here in Googleicious, and that's you only had 1, 2, 3, 4 over the past 1, 2, 3, 4, 5, 6, 7, almost 8 days. So you can see where it'll save you money from number 1, making you buy where it's an extremely oversold situation, as opposed to just going, no, I want to buy Google just for the heck of it. Now, let's say that you're bearish Google, and you're saying, man, you're crazy. Google's not going to go higher; it's going lower. Okay, then where would you short that at? And what you would do is you would short that at an extreme on the value area overbought situation. Works really good on stocks, options, futures, forex, gold, crude. Works on everything, because all it does is it gives you the Kelly Blue Book, like, hey, this is extremely overvalued. You don't want to pay up here. That's crazy. You're paying way over retail. You want to be paying wholesale prices on this thing, okay? So if you want to throw me some stocks or some symbols, I really don't care what the symbols are. You throw them out, and I'll do my job. Let me format the chart here so I can do format symbol, so I can do a look back period, so I can give you some I'm not going to change a bunch of different time frames just because it'll be too hard on me. But what I will do is I will do the symbols that you're interested in, so you can take a look at. Once again, for the first 50 people on this webinar, the indicator is only going to be $97. Okay, it's a one-time fee, and you can put that on multiple PCs up to 3 and multiple data vendors. So if you've got TradeStation and eSignal, it's all one fee, $97. All right, it's normally in a package of $997. So what we're doing is we're doing a marketing test. We're taking just the value charts out to see if we can get more people on the value chart bandwagon. All right, and then if you like it, if you want to upgrade, well, you can do that in the future. All right, it's only for the first 50 people. All right, let's take a look at some symbols here. I'm going to try to do them in order. PCLN. All right, price line on a daily, I would say that price line on a daily is in a massive uptrend. It just went below the cloud, so it's a little iffy, but not terrible. It's it's been 3 days below the cloud, so that would be a super aggressive short because the lagging line is not below the cloud. So I would be more into buying value on price line. So you could have bought here. You see the red? You could have bought here, here, and then also here on Friday. Now, if you don't agree with that, there's nothing wrong with that. You go, look, it's below the cloud. It's going to go lower. Let's short it. Okay. Well, then you would have had a great short on this right here. 1, 2, 3. You see this little gaggle of sell signals right here in that area. So it's useful whichever way you decide to go with it. All right. Let's take a look at soybeans at S. On soybeans, it's a massive uptrend. You only want to buy on the value chart buy signals. When you see these little red tips down here, then you want to be a buyer on those. So you'd buy on the bottom red tips. Now, like I said, green is the no zone. You leave the green alone. Yellow's the maybe, and red's the positive. If you see a red signal at the top, that's a sell. If you see a red signal at the bottom, that's a buy. Since we're in a massive uptrend, we want to buy all pullbacks in soybeans here, 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 and here. Looks good. Let's take at GC. On gold, we were just talking about gold before we logged on to this webinar. So gold, I would say, is still in a major uptrend, minor downtrend. It's bouncing off the top of the cloud. So your job would have been on Friday, would have been to buy gold right here in this area right here. You see this little double bottom? That's a buy on gold. You see it right here? Nice little signal. Good, good. In TF. At TF, Russell would still be in a valid uptrend, although it looks like it's going to go to the top of the cloud. Your job would have been to buy right basically at the close on Friday right there. That's a good little buy signal right there. And surprise, surprise, it's already up $7.40. What is your cloud indicator? It's called an Ichimoku. It's on REGN. REGN. Let's take a look for you here, Daniel. REGN is it's in the cloud, so it's a buy. I would buy value on the end of Friday. You see right here on the 10-minute. It was a decent buy. You just need to use a tight stop loss on it. QQQ. QQQ would be a major uptrend, minor downtrend. Buy value at the end of the Friday, and you're already getting a gap up on that one. AAPL. Apple's in a sideways funk. I would leave Apple alone. There's no advantage. So here's how I do this, and this is a great teaching example. If I don't know what Apple's doing on a daily, how in the love of God can I predict what it's going to do intraday? I can't. So right now it's a bullish signal because it's above the cloud, but the lagging line is below. Therefore, I can't touch this. It's kind of like MC Hammer. Can't touch this. So I have to leave it alone. CELG is in a massive sell. Finally, we have a short. So there's a massive sell signal here in CEGL. It's below the cloud. The lagging line's below. So if you look at this, here's a beautiful little example of shorts. So you would short here, and then you would also short it right here. Does everybody see that? So you'd short CELG here and here. Really good, perfect timing trades on CELG. Great. Can you look at VMW? VMW. Let's take a look at that. VMware, nice solid daily uptrend, is below the yellow, probably goes to the purple, but I would step in here and buy this at the end of Friday right there at the 106-ish area, and you're probably going to go to 108. So I'd buy the dips on that one. I would buy the red tips on value CVX. The link to buy at $97 instead of paying up to $997 for the indicator is ValueChart.com/chart. ValueChart.com/chart. I'm going to hyperlink you to it. Does everybody see it in the chat box too? I'll make sure everybody's got it. All right, I'm going to put the telephone number up there too for you. Area code 859 and 963 and then 3445. And if nobody answers, just leave a voicemail and they'll get back to you first thing in the morning. All right. Let's see here. How about options? HGOW about options. How about, yeah, it works great on options. It's going to give you the underlying stock and tell you if it's overvalued or undervalued, and then you can trade your options. Will it work on TOS? Yes, it works great on TOS. It works on TOS, Ameritrade, Thinkorswim, eSignal, works on NinjaTrader, works on Infinity, works on Sierra, works on all those. What is the cloud called? It's called Ichimoku. Can you change the colors? I'm sure you can. I never mess with them, but yeah, if you come in here and go V high, V low, bar, and then you just come in here and you can change the colors right here, V high, red, low. So if I wanted to change the value high to white, I could. Yes, you could do that. Boeing, BA. If I skipped your signal, I'm not trying to avoid you. There's just still hundreds and hundreds of people in here, and they're still flying by. The special is good for how long again? For this webinar. There's only 50 available for this webinar. It's a test. This is just like me doing a sample trade on gold going, hey, I'm going to do it with one lot. We are testing this price to see how many people are interested at $97. We're only going to sell 50 on this webinar, and we may never sell it again. But we might in 3 weeks. I don't know. We're actually just doing a test. So I don't want to blow smoke up your end and say we'll never offer it again, but we have no plans to at this point right now. We're just offering a marketing test to see how well it goes. If it goes good, we might do it again. If it goes terrible, we'll never do it again. Hubert, did you take the entries based on the daily reading or the 10-minute? So the entries, what I do on Boeing, you would have a solid sell signal. It's below the cloud. The lagging line's below. So what I would do is on a 10-minute on Boeing, I would short it on the 10-minute. Now, if you don't like a 10-minute, all you have to do is to say, all right, 10 minutes is a little too short for me. Boom. You could do it on a 60-minute, and you'd do sell signals. But a 10-minute on Boeing looks pretty good. It doesn't move around too much. So a 10-minute works really good. So I would short it here. I would also short it here, and then I would short it here. So 2 out of 3 really good signals there. And the third one's just decent. RTB, that doesn't work. MOH, maybe I put it in wrong. The value charts, I would take it off of the intraday signal, even for a swing trade, because I think you save a little bit of money by doing that way. MOH is in a solid uptrend. I would buy the dips on the red here. I would buy here, 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 and here. Buy the dips on MOH. This is only a one-time payment. Any other monthly fee? There are no other monthly fees, Gordon. It's a one-time fee of $97. One-time fee of $97. I will show you actually where you go to and what it looks like. So if you go to this website right here, and I'll copy and paste it myself. If you see this right here, it's value charts. That's $97. You put in your first name, last name, your address, all your billing information, and then put in your credit card, whether it's Visa, MasterCard, American Express. Come down here and hit place order. It's $97 one-time fee, and then you'll be sent everything you need in order to use value charts on your charts. What is the plus version? The plus version has more stuff. So the one you're getting offered today is, I'll show you exactly what we're doing on the test here. So normally, the value charts is only in the higher price package, $997, okay? The value chart core bundle gives you value chart plus, price action profile, the scanner, value flag, signal bars, value. So it gives you a lot of different ways to look at value charts. This is the main one right here. What we're doing is we're taking this one out and letting you see if you like it. Then if you end up loving it, and if you want to upgrade later, you can, right? The Ultimate's $14.97 and the Value Charts Plus package $5.97. It doesn't even have it. It's got more of the micro quant indicators in it and stuff. These are all great indicators. All we're trying to do is we're trying to roll out the welcome mat and say, hey, welcome to Value Charts. This is one of our best indicators we have. It's usually in a very expensive package. We're going to take a piece of it out, let you use it. Hopefully you make some money out of it, and then you'll come back and buy something else at a later time. Okay? That's why we're doing it. All right, let's keep on going. $97 for the first 50 orders. Yearly fee, monthly fee. There is no yearly fee. There is no monthly fee. It's a one-time $97 for the first 50 orders. I'm really interested in buying the Ultimate Bundle. Ed, just call the office or drop us an email. We'll take care of you. Is Ichimoku chart changes direction in the futures of the chart? Does that affect your decision on the stocks? Yeah. So if I've got a sell signal on Ichimoku, then I will take the topping signals, the overbought signals on value charts. If I've got if I'm a bearish on Ichimoku on whatever I'm looking at, I only want to pay attention to the reds on top. If I'm bullish in whatever I'm looking at on Ichimoku, then I want to buy the reds on the bottom. NEM is going to be really close to gold, and it's going to be NEM actually looks worse than gold. What am I talking about? NEM is leave me alone until Newmont Mining is just a leave me alone. It looks like it's above the cloud, but the lagging line is below the cloud, so it's just a leave me alone. Do you care about the value charts on a daily? I don't care about the value charts so much on a daily because I still look at it as an uptrend or a downtrend. About the farthest out I'll go on a value chart will be on a 60-minute or 240-minute chart. So yeah, can you show the value chart daily and a 30-minute chart also? I can do it on a couple here just because I'm trying to do it the way that I normally do it. So here's the value chart on a daily. I'll show you like at ES. That's a broad market. So you can see here on the ES, you can see on a daily here that it was saying, hey, this is extremely oversold. Does everybody see this? And here, let me line these charts up so you can see them perfectly. I don't want to make it look better or worse than it actually is. I want to make it look accurate. So there's a buy, and then here was a buy on the S&P. Okay, that's a big broad market. So it's telling you, hey, this is extremely overbought at this situation and this situation. So it depends on your stop loss, right? Value charts with orbs. Exactly. If you use it, you could do the same thing. If you know you're overvalued to the downside, then you can use orbs to the buy side. If you know you're overvalued to the high side, you can use orbs to the short side. So yeah, there's a good market proxy. I'll give you another one for, like, let's go daily on GC. You know, on gold, it was saying right here that gold was extremely overvalued to the high side on a daily, and then it continued to go up. So it's one of the reasons that I usually use it on smaller time frames. Here you can see it was, you know, extremely undervalued in these areas. So I use it on shorter time frames. I think it gives a little bit better signal on the shorters, for me anyway. Any backtesting information, percent profit or RO? Timothy, you'd have to ask Mark about that. He's the one that designed it and has all that. Does the 97 also include Hubert's Ichimoku charting? Gordon, Ichimoku is on most chart platforms. I don't sell it. Nobody sells it. It's kind of just included in all the different platforms. So yeah, so you don't have to buy that. It's in most platforms. AUD. Let's take a look at the Aussie dollar. Aussie dollar. Let's go AD here. AD. Here we go. Aussie dollar and the currency futures. This is a good example. Let's go through this. This is a good example. So you got a major long, a new uptrend on the Ichimoku. The value chart is a long, and then you can see, all right, then what do you want to do on a 10-minute? I want to focus on the buy side right here. So on the Aussie dollar, you'd have been a buyer at 91.90. It's a good little trade. Does it come with any training and how to use it? Yeah, I mean, this recording, there's also a recording on how to use it. We also have live tech support, so if you guys need help, we'll help you out. SPLS, we're not going to leave you high and dry, right? Because on down the road, we're hoping you'll invest in the larger package. Staples is a massive short. It's below the cloud. The lagging line is below. You should short Staples every time it bounces. It's a massive short. So what you're going to have to do is you can see right here, look, there's a short here, here, here. There's a short here, and then there's a short here. Decent signals. Can you use it on TOS? Yes, you can use it on TOS. I don't have TOS on this machine, but it works perfectly on TOS. Does it come with any training? How long will it take to receive the value charts? So, Mark, usually it takes 10 to 20 minutes, and we'll send it to you so you can download it. If you have any problems with the order, the office team gets in, I think, at 9 o'clock, 8 o'clock or 9 o'clock, and then they'll help you out live. It does not work with IB, sorry. NASDAQ is in a massive uptrend. It's on support. You'd want to have been a buyer on Friday right here. You see this? You're a buyer of extremely oversold. Since you're in a value area, sell signal. You're in a massive uptrend on NASDAQ. You're on support. You want to buy an extremely oversold situation. Boom, you want to buy it right there and deal with the profits. At US, let's take a look at the bond market. Bond market, massive uptrend, minor uptrend. We want to buy all little sell-offs. See this little sell-off? See these little sell-offs right here? Value area. You'd be a buyer right there. You'd have been a buyer right here. Let's take a look at crude oil at CL. Does this thing work all the time? No, of course not. I'm never going to lie to you and tell you that anything works all the time. There are no perfect traders. There are no perfect indicators. There are no perfect markets. There's just trades. So, yeah, you're going to have some winners. You're going to have some losers. But at least now you won't have to say, like, oh, I really think I should buy some Netflix. Well, why? Well, I just think it's a good buy here. Now you'll statistically have a statistical algorithm to go, yep, you're correct. Here is a good buy. Now, will that work every time? No. Are you hoping it works more time than it doesn't? Yes, that's what this game is all about. Crude oil, we're in a major uptrend and a minor uptrend. You don't want to be a buyer. Unfortunately, on the 10-minute, there hasn't been a whole lot of buys, except there was a really good one right here on Thursday. Look here. Nice little buy signal here at the dead low, and then crude has been, so that was about $100, and now you can see crude's trading at 101.50. Good little trade. Now, if you're going to get aggressive, you could trade the yellows, right? But those are only moderately oversold, okay? Mark, email us, support@valuecharts.com. You can also email my team if you don't hear from ValueCharts. You can do support@hubertsenters.com. My team will take care of you too. Can I fire an alert? I don't know if it's set up to do an alert, but here's how I work around that. I actually have this set at +8 on a horizontal line, and then I tie the alert to the ± 8 when it goes through that. That's how I deal with the alert. That way I can do my own custom alerts. Will this package also show the candle color that you showed here? Is it? Nope. That's Gordon. That's the more advanced one. That would be the package one. What you're getting when you buy the value charts is you're getting this. The only indicator you're getting is this right here. And the reason we're doing it is because a lot of people are asking for it. And a lot of people didn't want the others, and then some people did. So we're like, hey, why don't we break it out and see how it works? So you're getting the overbought and oversold on the subgraph too is what you're getting. Where do you put your stops? Chrissy, I would use parabolic SARs on the stops. Stops are kind of a personal thing. It's kind of like asking somebody like, hey, what kind of car you drive or what's your net worth? But stops are kind of an individual thing. And my stop may not work for you, and your stop may not work for me, but parabolic SARs work really good for almost everybody. Let's see here. All right, any other symbols? Throw me out some more symbols because the symbols have gone up past the questions. POT. On a daily, it's a massive uptrend, so you should have been a buyer Friday right here. Perfect little buy signal. You should also, on Wednesday, you should have been a buyer right here. Perfect little buy signal. Good. Works good on POT. I've already did a yes 9 times. NFLX. NFLX is a short. It's an aggressive short. 1, 2, 3, 4. 4 bars below the cloud, and the lagging line's about to go. I would just wait on Netflix to wait for the lagging line to confirm that it's going down. That's what I would do. So on Netflix, it would be an aggressive sell signal if you can get one, right? And right here was the most recent sell signal on Netflix, which was right there, which, you know, in the grand scheme of things, that's pretty good. You could have Netflix short at 381.38. That's pretty good. It's just, it's not official. It's not a great sell signal on the daily. LinkedIn, LNKD. LinkedIn's a short, so what you'd want to do is you'd want to find areas to short. Here's a short, and just use a parabolic as a stop. IWM, I've already done that one. LUV. LUV is a massive uptrend. You would be a buyer. Last buy was at the end of Friday and or the beginning of Thursday. Good little buy spots. All right, did SPLS. All right, did PCLN. I did QQQQs. All right, did Apple too. How does ValueCharts work with a 4-range tick charts and a 5 larger tick charts? Keith, I've never used it on tick charts, so I'm not really sure. How does ValueChart differ from short-term oscillator like RSI? It's a lot better, Eric. It's a whole lot better. It's more statistics. Uh, it'd be a whole thing. There's a good one, ADBE. It'd be a whole webinar telling you why it's so much better. All right, Adobe is a buy on support. You would have been a buyer on Friday and a buyer first thing Thursday. Ooh, that's a good little signal on Adobe. Nice. JEC. JEC is a long. You would have been a buyer at the right here at about 63.20, and then also first thing on Thursday. Good little signals there. BIDU. BIDU looks like is it a mass? Oh, here we go. Massive short signal below the cloud, lagging line below. So you would have sell signals here on BIDU. Let me give them to you. They would be here and here. And then you'd also have a sell signal here. Not bad. Looks good. Does it work on E-Trade platform? Unfortunately, no, it does not. IEV. IEV is a buy signal on the daily. It's above the cloud, above the purple, above the yellow. Lagging line is up. You would want to be a buyer on Friday, Thursday, Wednesday. You'd have been a buyer right here on Wednesday. See these little red tips right here? So you'd have been a buyer right here and right here. Good little buy signal. You'd have got in less than, you'd probably got in at 47.50. Now it's trading at 47.97, so good little trade. Can you look at CF? Yes. CF Industries is long. It's above the cloud, above both short and medium lines, lagging lines up. You had been a buyer. It had been Friday, Thursday, Wednesday, Tuesday, Monday on the sell-off. You had an opportunity to pick it up at 252, and now it's trading at 257. You have completely gone Ichimoku over the last 12 months versus the squeeze. You have, have I given up on the squeeze? No, I'm just redesigning the squeeze. And it's coming along really good. I'm probably about half to three-quarters of the way redesigning the squeeze. I'm trying to make it so that it takes in effect some of the high-frequency trade stuff. So it's going to be really cool once I release it. But I'm nowhere near close to releasing it. So what is it called, the value? What is it called when the value is incorporated in the price bar? It's called a value bar, and it'll paint on the bar. Yeah, it'll paint on the bar. What is the difference between value chart and standard deviation channels on TOS? Richard, that's a great question for Mark. I would have to let him answer that. I can just tell you I'm a huge fan of it, guys. I've been using it for years, and it's a great indicator. It's about all I can tell you. I'm not the math whiz. I'm the guy that once I know how to use something, I just make it really simple, and I just use it until it stops working, and then I use something else. Will the new squeeze be ported to TOS? Don't know. Depends if they want to pay the license for it or not. I don't know. Can you use the value bars and candlesticks instead of bars? Yes, you can. How do you use it for Forex charts? I don't see that it works on Forex charts. Hey, Mark, do you have it for MT4? I don't know if they have it for MT4. I think they do. I'm not positive, though, but I think they have it for MT4. I'm pretty sure they do, but I'm just not positive. I'll have to check with it. Check on that for you. Yeah. So, yeah. All right. Any more symbols? Give me a couple more here, and I'll turn you loose. I know we're probably getting real close to the 50. I haven't been checking the shopping cart. I've just been talking to you guys. Do we get the value bars for 97 or just the lower study? Only the lower study. You don't get all. I'm going to be crystal clear with you what you're getting. This is a $997 package. You see where it says Value Charts Plus, Price Action Profile, Value Scanner, Value Flags, Signal Bars, Value Alerts, Value Levers. You're getting this top one, which is basically the study that all these others are based upon. All the ones below is a different way to visually represent the same thing. All right, I use them all. All right, my favorite is Value Charts. So what I talked to Mark and his team and doing, I'm like, hey, why don't we break that out and get as many people, roll out the welcome mat, and see if you guys can get more people, drinking the Kool-Aid of Value Charts. And then, if they start making money with it, they may want to, get the other indicators in the package. And then you can make them a deal on that. So if you don't have it, you should get it. It's only $97, and I have no idea how long we'll keep it at that, or if we'll keep it at that at all. So it's a one-time fee of $97. I know it's a question I keep on getting. I am not in the bait and switch business. I am in the business of making you an extremely crazy good deal. It's a no-brainer. If you're thinking about whether you should do this or don't. It's $97 one-time fee is all it is. If it's a hard decision, then don't do it. And I'm not trying to talk you out of it. I'm just saying it's a really insane value. Yvonne says, I drank the Kool-Aid a couple of days ago, and I liked it. There you go. One-time fee. MGM. Let's take a look at that. MGM, it's in a valid uptrend. It's on support. I'd be a buyer on Friday and first thing on Thursday. You can see the signals. There's also a couple here on Wednesday. So I would buy with a tight stop on that one. It looks really good. SPY. SPY is a long. You should have bought at the end of the day on Friday and first thing on Thursday. Any place I can read more about the objective valuation of the model? You can check ValueCharts.com, William. Why don't ValueCharts website allow credit cards? Annoying. Oh, debit cards. Sonny, I'm not sure. If you just call the office, area code 859-963-3445, you can leave us a voicemail. If my team's not answering, they're home tonight, but they've got phones at the house, and they're answering those. And then if you get voicemail, we'll call you first thing Monday morning and make sure you get what you need. They'll take good care of you. VIPS. VIPS is, I would say VIPS is a long, but it's below the yellow and the purple, so you got to be a little careful here. You had a signal first thing Thursday and in the afternoon on Wednesday. You got no real buy signals on Friday. 97 only buy, and can you see only the value chart bars in the bottom panel here? Yes, this is what you're buying right here. When you buy the indicator, it will be in your second panel. We call this subgraph 2, and you're going to have the ability to see these. Now you can change it to whatever time frame you want. You're just not going to have the ability to have it on top of the candles and have the candles be different colors and all that stuff. You still get the overall basis formation of the thing, which is the one I use the most anyway. All right. It is available for toss. You are correct, Bill. It is. Did you do CELG? I believe I did CELG. I think I did. Let me check a look. Yeah, because it was a short, and yeah, and right here are the signals. Sell here and sell here. We already did that one. Two really excellent sell signals on CELG. I probably already do have 50 to tell you the truth. But I have no idea. I can't log into the cart and talk to you guys at the same time. So I'm just going to keep doing it until you guys run out of symbols. And if you get in there, you get in there, okay? I have value charts intended mainly for intraday. Is value charts intended mainly for intraday, or will it work on swing trades? No, it works great on swing trades. So let's take this example. So CELG is a dead sell short, right? It's going lower. It's going lower. I'm just entering on a 10-minute signal because I want to save some money. In other words, I'm going to short here, and I'm going to short here, but I'm going to hold it over several days, several weeks. Yes. It's intended for both intraday and swing trades. When I enter a swing trade, I usually try to get it in on an intraday signal because I can get a laser-targeted entry on that thing, and I don't have to risk a lot of money. I already got you, Corey. I think I already got you, Corey, on that same answer. Does it work well with your centers indicator? Yes. Can you also change this so you can see 5 colors running along the top? Easier to see, in my opinion. Yeah, you could change this to where you're going to have 3 different. You're going to have red, yellow, green, red, yellow, green. You can change those colors, yes. It's both for swing and intraday. AMZN. I'll do Morgan Stanley here in just a minute. Amazon's a short. So you had sell signals on Amazon on Friday. Here. Oh, man, it's a nice signal on Amazon. And here. So two good signals on Amazon right there. And you also had a sell signal on Amazon right here. Good. I mean, it's killing it on Amazon. It's a really good signal. Amazon's a short. It's a Rogge indicator. What's a Rogge indicator? Rogge Horner? No, it's not. This isn't her indicator. Value charts can be downloaded to TradeStation. Yes, it can. Oh, reggae. Reggae is in music. I got you. I got you. Does the indicator lag the price? No, it's a real-time indicator. It's going to tell you basically like, hey, this is a good place to buy. This is a good place to sell. I only deal with the extremes. Okay. What is the number that is highlighted on the right of the value chart? Okay, so on the right, that's just telling you its current value. So like right now it's trading at minus 1.07. So when you're looking at value, the coolest thing is, let's say that you don't agree with the value, and you say, that's BS. I don't like the input of 8 or 9. You can actually, like Marco, do a 5 here. I use a 14 because I just use it standard. So what this means is when it's extremely overbought, it's going to be above plus 8. You see that? When it's above plus 8, you're going to get these little reds. When it's below minus 8, you're going to get these reds. When you're below minus 4 to minus 7.99, it's going to be yellow. When you're 4 to 7.99, it's going to be green. So yeah, you can set that up. I did do win, yes. What is your profit target once getting in on a 10-minute VC signal? Eric, it's different for everything. I would use profit targets based upon my risk profile. Yep. Can value charts be used on Forex? Yes, it works great on Forex. Is the toss version looks completely different and the value seems to vary from yours to not? It does a little bit different math, Fred, but it shouldn't be too far off. But it does look different because you can't make TradeStation and toss look the same. They're two different programming languages, so it will look a little different. But the overall intended result should be about the same. You got it. All right, that is it for me tonight. I appreciate you guys showing up. Thank you very much. Will it work well on a 5-minute and 2-minute as well as a 10? Yes, you will get more signals, Joe, so you might get more false positives, but yes, it will work. What does it do with gaps like indices did tonight? Well, let's take a look at ES. If you're looking at ES, it's telling you, like on this gap up, it's saying, hey, you should sell that. Now, you've got the value on the ES is in an uptrend it's sideways to slightly higher, right? So it's saying buy here on Friday and sell on this gap up. Now, on that gap up situation, you know it's going to throw it off a little bit because it's going to tell you, like, hey, there's a gap up that's extremely overvalued on the buy side. So it's extremely overbought there. And it's going to tell you, like, hey, you should sell that. You just have to use a little bit of common sense on gaps. Oh, Morgan Stanley, I'm sorry. Morgan Stanley is complicated. It's too complicated to answer. It's in the cloud, and the lagging line's in the cloud. Morgan Stanley is a leave me alone until it makes its mind up. You're welcome, Chip. CRM. Once again, ValueCharts.com/chart. Area code 859-963-3445. Area code 859-963-3445. This would be a super, super aggressive sell signal, short. You have 1, 2, 3, 4, 5 candlesticks below the line. The lagging line's almost there, so I would start the shorting process on CRM. You could have started it as early as last week, but, man, it would just be aggressive. It would just been an aggressive trade. It'd be a little bit too rich for my blood, but right here's a perfect sell signal on CRM right here up in these areas. It said sell, 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 about 57.50. It's trading at 55.74. It'd been hard to do, though, because it wasn't ready yet. Yeah, better to enable extended sessions to avoid gas. You can do that. You most definitely can do that. That's not a problem at all doing that. All right. Good luck. Hope it helps. I'll see you guys on the next webinar, and I'll also see you on the videos. Once again, it's ValueCharts.com/chart. For the first 50 orders, you can grab it for $97. You can also call the office. Like I said, hopefully you guys enjoy it, and I'll see you guys on the next webinar. Good luck. Hope it helps. I'll see you on the next one.